Chair Lalonde, we are live.
Thank you, Chris-Anne. Okay, I think it's time to call the meeting to order. The clerk has confirmed that we have a quorum. Can I ask you, Chris-Anne, to read the land acknowledgement, please?
We acknowledge the land we are meeting on is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabeg, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. We also acknowledge that Toronto is covered by Treaty 13 with the Mississaugas of the Credit.
Thank you very much. Do we have any conflicts of interest under the Municipal Conflict of Interest Act, Joanne or Julie?
No conflicts.
Julie, I think you must be muted.
Sorry, no conflicts.
Okay, thank you. Okay, first item of business is to approve the minutes from the last meeting, the December meeting. Unless there are any questions or issues with the meeting, could I ask Julie for you to motion their approval?
So moved.
Okay, all in favor? Yeah.
Oh.
All right, thank you. Okay, just before we start, I'll remind everybody we're live. We're on the YouTube channel of the TTC YouTube channel. I think that because there's just the three of us, we don't need to send emails around for requests to speak or to ask questions. But if you do end up having a motion on anything, it would be appreciated if you could email that motion to staff. And I think you have troubleshooting information if you need it. But if you just wave wildly, we'll figure out that you're having an issue as well. Okay, first item is to receive the report from KPMG on their audit findings of our consolidated financial statements. And for that, we have our guest, Joanne. Is your last name pronounced Mui?
That's right.
Great. Well, welcome, Joanne. I'll let you go through this item and introduce anyone that you have with you.
Great, thank you. Well, first off, good morning, everyone. Thank you for the invitation to join you this morning and to present our audit findings. I am Joanne Moy. I am the audit partner responsible for the audit, the 2020 audit. And with me, I also have Regan Travers, who is our senior manager looking after the audit with me. So between the two of us, we'll talk you through our audit highlights and our audit report, findings report with you. Included in your package is our audit findings report, and we will start on the executive summary page, which is printed page number 3 of the document. Just give a minute to make sure everybody is there.
Got it.
Okay. Great. So the executive summary really summarizes the content of this report. The first item being what's new in 2020. Of course, being new external auditors to the TTC, everything might feel a bit new, but really we wanted to highlight to the committee's attention what is something that is typically net new to organizations, in particular with respect to audit this year. The COVID-19 pandemic is certainly still with us, and it has impacted the way that we conduct audits, and also has impacted what we have to consider as part of audit risks and a risk assessment process. There's a lot more information down the pages, but some of the key ones to consider is, of course, data security. It's important from our perspective. So when we obtain audit evidence in a remote setting, that we wanted to make sure that all the evidence that we've obtained, they are authentic, and that information is not altered along transmission, and therefore what we are viewing, for example, on screen are authentic documents that, and we're using only the approved tools that we have for the purpose of the audit. The other items that we have to think about, of course, is what are some of the controls in particular that have financial implications that has changed with the TTC since the pandemic has hit. And with that, to be able to conclude whether or not our audit approach continues to be adequate or whether or not there are some alterations that are required. The other item that is new this year is a new set of auditing standards, in particular for the auditing of estimates. So with as external auditors, we're always required to audit estimates and look at estimates, but this particular standard require us to look at estimates a little bit more granular and look at it in a particular manner versus in the past, as auditors, we had greater flexibility on how do we go about and complete that audit procedure. So management would have cooperated with us to get all the necessary information for auditing estimates with respect to the financial statements of the TTC. A couple of them we'll discuss in a little bit into the report. In terms of the change, any changes from the audit plan that was previously presented to you, there has been no significant changes to bring to your attention. We were able to conduct the audit as we anticipated and complete the procedures that we had wanted. In terms of audit adjustments, we're very happy to report that there's no corrected or uncorrected adjustments. So there were no adjustments identified to bring to your attention today. So kudos to management for that. In terms of audit status, we are in very good shape. At this point, everything that we're set out to do are complete. The only items that are remaining on this page, they are supposed to be remaining at this point. One item being the discussion with you as committee today. Then alongside with the following items being reviewing the approval of the board's approval of the financial statements, obtaining a copy of the signed representation letter from management, which will only come when the board approves the financial statements. And for us to really continue to stay in touch with management to be aware of any significant subsequent events from now until then. Okay. And just moving on to next page, a couple more items to update the committee. The big item there to update you is that we're also very happy to say that we did not identify any significant control deficiencies to bring to your attention. If we identify any of such significant control deficiencies, we're required to communicate those to your attention. With that, I'll pass it on to my colleague Regan to talk through some of our audit risks and results.
Thank you, Joanne. So if you're following along, right now I'm on, it's the PDF or printed page 9, but it says page 8 at the bottom. So I'm going to go through the audit risks and results and go over some of the areas of focus as well. So I'd just like to preface my discussion by stating that I will be discussing these areas of focus. As Joanne had previously mentioned, we did not have any audit adjustments. However, we did just want to communicate to you, this is where we did spend a significant portion of our time. We just wanted to communicate some of the procedures that we performed over the key risk areas. So moving on, so on pages 8 and 9, we have two significant financial reporting risks. These are the risk of the risk of material misstatement due to fraud resulting from management override of controls, and also the risk of material misstatement due to fraudulent revenue recognition. So these risks are not unique to the TTC. These are presumed risks per the Canadian auditing standards and are considered significant risks in all of the audits that we perform. So these are not unique risks to the TTC. In all our audits, we have to design specific procedures to address these risks. And some of these are outlined in pages 8 and 9. And throughout the performance of these procedures, there were no issues noted regarding management override of controls or fraudulent revenue recognition. So moving down to page 10, I'm just going to go over some of the areas of focus. The first one that I'm going to go over is the passenger services revenue. So passenger service revenue is a significant revenue stream to the TTC. Total passenger service revenue for the year was $516 million. We have outlined in our report a suite of procedures that we perform over passenger service revenue. And throughout the performance of these procedures, we did not note any issues. Moving on to the next item, which is unsettled accident claims. So unsettled accident claims is a significant liability. It has a balance of approximately 147 million. And this is also a complex estimate. So management utilizes actuarial experts to compute this amount. We in turn use our own actuarial experts to analyze the methodology, calculation, assumptions that are used in the determination of this amount. Additionally, we test the underlying data that's used to build up this calculation. And throughout all of our procedures that we performed, we've concluded that the estimate is appropriate. So moving on to page 12 at the bottom of the page is employee future benefits liabilities. So this is another large liability. It has a balance of 784 million. And this is also a complex estimate. Again, management uses actuarial experts to help with the calculation of this amount. We in turn use our actuarial experts to assess this calculation, reviewing the methodology and assumptions used in building it. And then additionally, we also test the underlying information and data that goes into the determination of this liability. We have also concluded that this estimate is appropriate. The next area of focus that I'm going to discuss is tangible capital assets. This is also a very significant balance. The TTC is a very capital intensive. So at year end, the TTC had 12.3 billion in tangible capital assets. So this is an area where we did spend a lot of our time as well. During the year, the TTC recognized 829 million in capital asset additions. So we performed a large number of procedures over this. So we reviewed the continuity of the tangible capital asset schedule. We performed testing over additions, disposals. We also reviewed the amortization. And throughout the performance of all of these procedures, no exceptions were noted during our testing. So I'm going to pass it back to Joanne to carry on with the remainder of the presentation.
Right, thank you. On to the next page where it speaks about financial statement presentation and disclosure. This is to let the committee know that everything that we've reviewed the financial statements in detail, and that any recommendations that we have provided to management with respect to disclosures are captured in the financial statements, and there's no omission to bring to your attention. The financial statements that you have in front of you, they are in compliance with the Canadian accounting standards for the public sector entities. Moving on to the next couple of pages, misstatements I've discussed that we had no adjustments identified, and the next several pages relating to current developments and audit trends, and in particular, lots of information about the upcoming accounting standards relating to the public sector entities. Now I'll just draw your attention to Appendix 1 under Other Required Communications. And on this slide, it's the various touch points and documents that communication documents that we're required to have with management and you, those charged with governance. One of the items that I'd like to discuss is independence. Of course, as external auditors, we are required to be independent of the TTC to be able to serve you in this capacity. Since we became auditors, we're required to look at, as new auditors, we're required to look at any existing non-audit services as at the date that we were appointed, and also any new non-audit services to ensure that we remain independent as auditors. And these engagements are all reviewed, just for your information, these engagements are all reviewed by the City of Toronto lead audit engagement partner, who is tasked internally on our end to manage these independence considerations. And from a process perspective, I'm also part of that process as the partner on the TTC account. As part of this process, we became aware of a non-audit project which commenced prior to our appointment as auditors, and it included a loan staff component. Since the independence rules require that loan staff arrangements for audit clients only be short-term, continuing the loan staff arrangements wouldn't be compatible with the audit independence rules. So we've acted on the required protocols, and the loan staff arrangements is no longer in place. I share this as part of the process that for us to be able to say that we confirm to the committee that for fiscal 2020, we're independent of the TTC to be able to serve you as external auditors. The other thing that I'll just mention on this slide is a management letter. From time to time, if we do see any improvement observations or best practices to recommend to management, we would be communicating those as part of the audit process annually with management, and those have been done through a management letter this year. Moving on to Appendix 4, just for your information, this is the management representation letter that I had mentioned earlier in my presentation, that this is a document that management is required to sign back to us upon the board's approval of the financial statements. And finally, to bring to your attention is the last appendix, Appendix 5, and this is our draft audit opinion. And you will note that this is a clean audit opinion. There is one paragraph that would appear new that wouldn't be there last year, and this is the other matters paragraph that effectively describes that last year's financial statements were audited by another set of auditors with an unqualified opinion dated last year's audit report date. And with that, this is everything that we'd like to bring to the committee's attention, and Regan and I will be happy to take any questions.
Thank you, Joanne. Are you required to ask us if we're aware of any fraud?
So yes, we have done that as part of our process during our planning discussions. But to the extent that we have an opportunity to speak to you, we'd always like to update our fraud and potential illegal act discussions.
Okay, I'm not aware of any such instance. Joanne and Julie, I assume you are not either?
No.
Okay.
Fantastic. Thank you.
No, but I do have a question, so I'll explain later.
Yeah, please go ahead, Joanne.
Okay. Thank you. I had three questions, actually, 3 things I've identified. The first one for our auditors. I'm aware that the processes that you as auditors now can put in place with respect to the level of analysis that you can do and just the level of testing with new technology tools is much, much deeper than in the old days, you know, where we had the paper system. So I just wanted to get a sense from you as to how deep that takes you, because I think my sense is from other audit committees that I sit on and conversations I've had with firms like yours is that there's just a greater depth of analysis that you can do, and therefore, as an audit committee, we can perhaps have a lot more confidence, if I can say that, in the statement. So just perhaps give us a little bit of a sense of that. How evolved is your testing and analytical capability? How deep you can go?
Yeah, for sure. And I think maybe I can speak also in general terms that the audit world is certainly evolving, and we're seeing from more and more organizations, in particular in the COVID environment, there's just more and more data that is being stored digitally as it ever has in the past. So from an auditor perspective, there's definitely more data that we're able to analyze than we were able to obtain in the past, and run different types of analyses on tables and various set of data set. In terms of technology, where things can get to eventually, we're hoping that eventually we'll be able to get to a place where we would be able to conduct account analysis, really doing account predictions, like in the way that management records their journal entries, to be able to say, we've looked at every revenue entry that you've included in your general ledger, and we've paired with our expected journal entry patterns, and these are some of the areas that we're required to look into further detail. In order to implement that, it is a significant undertaking to be able to deploy this level of data and analytics. But other data and analytics that we would have done, for instance, for this particular for this particular engagement is we did look at journal entries, and we've sifted through all your journal entries and to pick and to be able to identify the entries that we consider them to be high risk. So we include a set of data expectation, journal entry expectations that we think those would be anomalies, and to help identify some of those for testing. So this test, for instance, is sifting through all the journal entries of the TTC for the entire year to be able to identify the selected entries to test. I'm just going to turn over to see if I missed anything, Regan, that maybe I should be highlighting.
No, I think you nailed that one pretty well. Just the one thing I'd like to add on as well is we also have to do completeness procedures over that journal entry data to ensure that it is complete. So for each GL account, we actually roll and recalculate the entire GL as well to ensure that we have a complete set of data.
Okay. Well, thanks for that. And Ron, I had a couple of others, but I will, I don't want to go on. So if Julie had a question or you had some issues you wanted to raise, I can come back to mine.
Okay, will do. Julie, do you have any questions?
I'm good, thank you.
I just had one question, Joanne, relating to the materiality. I noted that you based the materiality on our expense level. I'm wondering, I can't recall whether that's how it's been done in the past. But, typically it's based off revenues, but I realize that this year was an unusual year for revenues. Is it typical for us to base it off expenses in any case?
Yeah, it is. It is common for public sector for us to base the materiality based on total expenses.
Okay. And if we were to base it off revenues, I assume it would lower the materiality threshold. And the impact of that would simply be that you would need to do more work in your procedures. Is that correct? Or how would that work?
Yeah, if the revenue number is lower, then yes, it would mean more samples, and we'll be working with a smaller thresholds across the financial statement audits. And we typically select total expenses also because it's more representative of the operations of the entity.
Right.
Versus
Okay.
total revenue.
Okay. I didn't have any other questions. So Joanne, I'll go back to you. Please go on with your other questions.
Thank you. This is more perhaps to the management team than to our auditors, but when we look at fraud, when we look at that issue and the risk, because we have different levels of fees, or that people pay. We have experienced manipulation of that in other words, people getting hold of seniors passes or children's passes and misusing them. So really more of a question, as I say, to the management team, what and what controls do we have in place? Because then of course that affects our revenue, and we're quite dependent on passenger revenue, so that can be manipulated. That can be, we could in fact lose a lot of money there. So it's a form of fraud, I suppose we could call it that. So perhaps more a question to the management team, and then from Joanne and Regan, from your perspective, how do you look at that? Do you account for that, or is that just it's just a fact of life in transportation with multiple methods of payment and levels of payment?
Perhaps I could ask Josie to tackle that first, if you're online, Josie.
Yes, I am. Good morning. And through the chair, thank you for that question, Joanne. So, as you know, we have Presto information that helps guide our analysis. There's a huge reconciliation issue, but of course it is, after the fact, right? It's information once we receive our data. And we have a little team that does revenue analytics on there. And of course, the other side of the operation is, our revenue protection group who are out there on the enforcement side. So we are doing analysis. We do monitor how our concessions are being used. And we do try to deploy some strategies, but our primary revenue source is passenger revenue. And that is, built on the different fee structures that we have. I mean, we do have situations where we do monitor monthly passes to make sure that they're, being used appropriately. We have called them back. So we do have, some systems in place, and it's getting better with the Presto data and the, adoption rate that I think in the old days we were using a lot of different kind of methodologies, surveys and other things to assess the situation. But with Presto data and the use of Presto increasing to over 90%, that's given us capacity to do that kind of reconciliation work and see what's out in the system that has names. We've pulled back passes. So we've done that kind of work as well.
Okay, thanks for that. And perhaps there's just an awareness communication component here that could be thought about. Just kind of remind us all as transit users that we should pay our fair share, kind of thing. But that's a discussion for another table. The other sort of management, also perhaps to management, in the accident claims, it's just again a fact of life as transit going through busy streets used by motorists and cyclists and pedestrians. There just are going to be accidents. So just the question around technology developments against alerts that we can be putting on buses in our streetcars, and so that we manage it from that perspective. Again, perhaps more of a question for the management team, and then as auditors, something for you to perhaps, when you're asking that question internally, when you're doing the review, to look at that component. Are there things we can do there to mitigate our accident exposure?
So I will start through the chair, and maybe some of my colleagues might be able to assist, Kirsten or Mary. But essentially, we do have a very, very robust program of safety training and certification and recertification for all our operators. So that's like, as you know, safety is a core value here at the TTC. We take it at, it's the most critical component. So there is all of that. From a technology perspective, of course, we are working on a program, as you know, on installation of cameras on our streetcars in particular. And so we are, trying to look and deploy all the kinds of technologies that can assist the operators as they're actually in motion. Kirsten or Mary, I'm not sure if you have anything else to add to that.
Hi, it's Kirsten. Just to add to that and just sort of reinforce that, the foundation of ensuring operators operate safely is around our training program. That is, the 21 days training we have initial for operators, and of course the recertification. So that is our number one tool.
And perhaps, Joanne, we'll have a chance to go into issues around this a little bit more on item 5, where we get the safety report from the TTC.
Yes, I was going to add that. Thank you. So those were my questions. Thank you.
Ron, I have a question.
Go ahead.
Just following on something that Joanne asked. I mean, we do know from the Auditor General's report the magnitude of the fare evasion problem, which, as Joanne pointed out, is a form of fraud, small time on the individual level and massive when you take it collectively. And we had, I'm guessing 3 years ago was when we had that report, maybe 2, that actually quantified as best one could through observations and other tools, the level of the fraud, and put it at about 65 million, which is a year, which is under normal circumstances, which is a very large number. And I'm wondering if there's any guidance, because that was, I believe, the first time this had ever been undertaken, this kind of work. And leaving aside the fact that we're in COVID-19 right now, so the numbers would be a little, I'm not sure they would be representative, but if there's any guidance as to, we've taken some measures at the TTC. They've been looking at enforcement and education and so on. What our obligation is to find out, to do another audit, in other words, to get another exercise where once we get our passengers back, to see what's happening on the fare evasion question?
So let me start, but I'm going to direct that question to the external auditors, to Joanne. I think the answer might be that the issue of passenger fraud is not an issue that relates to our financial statements, because our financial statements accurately report the revenue that we do successfully collect from our passengers. But it undoubtedly represents a significant operating issue for the TTC going forward that we need to stay attuned to. And perhaps we can ask, if my answer on the first part is right, then perhaps we can ask Kirsten to talk about that. But first, Joanne, from an external audit point of view, have I captured that correctly with respect to the financial statements?
Yeah, that's correct. Like, I mean, we do consider that as part of the audit, and as part of, looking at revenue in general, that we've done robust control testing relating to the various revenue-related controls that TTC has in place. And we've also taken a look at the controls that Presto has in place, because there's such a heavy reliance on those. And also the various controls that TTC has to make sure that to supplement the Presto controls to the best of ability to make sure that the numbers are captured in your financial statements.
Okay, Kirsten, maybe you can just give us a status update on fare evasion issues and how we're dealing with that.
Yes, of course, through the chair. So the report that you're referring to, Commissioner Osborne, was the City Auditor General's report. And there was a number, as you may recall, there was a number of recommendations. And in fact, we were just discussing those recommendations the other day. And as Chris can confirm, we'll be reporting back to ARMC in September on the status of those. But in the interim, we've done a lot of work around, adding workforce around special constables and fare inspectors. The deployment strategy was aligned to where we knew the fare evasion was, particularly around child cards. And as Josie sort of as outlined, we use the data analytics to identify where the fraud is happening from Presto. So there is a lot of work ongoing. I will say, though, that in the pandemic, we had, slowed and stopped at times the fare inspection to better use our resources to assist customers in the system. So, and then the other question I think you had, Commissioner Osborne, was with respect to whether we would be coming back and doing some of our own audits against the fare evasion. Tara Ball at the time had presented to the Commission the results of their spot audits and essentially confirmed the AG findings and provided greater insights. And the plan at that time, and it will continue, is to go back and do more of that work and report through the ARMC or the board as appropriate. I hope that helps.
Thank you. Yes.
Okay, thank you, Kirsten. So Joanne or Julie, any other questions for the auditors or management? Okay, this is where I do my annual little rant that at this point in the meeting, I would typically excuse management and all observers and have an in-camera meeting with the committee and the external auditors to inquire as to whether there were any issues they would like to bring to our attention that it would be inappropriate to do in a public forum. But I'm informed by our clerk that I would be breaking the law by doing that, even though every other audit committee in North America does that. So I will not do that at this meeting, but I will make my impassioned plea to the province that this is inappropriate legislation. With that, I will ask for the recommendation to what are we actually doing? We're approving the recommendations in the report, but we're adjusting the date that this report will go to the city committee to July 7th. So it's coming on the screen. Okay, so we're approving the report and we're forwarding it to the city clerk for the city audit committee meeting for July 7th. Joanne, will you move this recommendation? Okay, and all in favor? That is approved unanimously. Thank you very much, Joanne and Reagan. I don't know if you're required to participate in any of the ongoing items. If not, please feel free to drop off. We'll go to item number 2, which is to consider the draft consolidated financial statements. And Josie, I'll ask you to introduce the item and your colleague that's going to speak to it.
Thank you very much. And if our colleagues at KPMG are leaving, I'd just like to say thank you. It was quite a bit of work, and I would just like to thank everyone at the team at the TTC, the KPMG team. I think we worked really well together under all the auspices of having remote review, and I just wanted to have that done before they left. So thank you for that moment to say that. So now turning to agenda item number 2, it's our draft consolidated financial statements of the TTC. As you know, we're required to prepare these statements annually, which are then consolidated into the city's annual financial statements, and of course are based on public sector accounting standard requirements. So in 2020, the operating funding requirements exceeded our budget by $590.2 million due to the impact of COVID-19, of course, net of our cost containment actions that we took. And this shortfall was fully offset by funding received under the Safe Restart Agreement, as you also know. And so if the committee so wishes, Alex Kassar, our Director of Budgets, Costing and Financial Reporting, is available to provide a walkthrough of the statements for the committee.
Thank you, Josie. I think that would be appropriate to have Alex do that. So Alex, please go ahead.
Okay, I'm just gonna share the statements, and they'll be up on the screen in a moment. Okay. Okay, great. Okay. Okay, thank you, Josie, and through the chair. Just like to start off my comments by thanking the staff throughout the TTC who are part of pulling the financial statements together each year, and also doing all the regular financial reporting as well. This final product is effectively the work of individuals throughout the TTC, virtually every employee within finance, I would say, and also several contributions from throughout the organization as well. I'd also like to thank our manager of financial reporting, Sharon Tippett, and her assistant manager, Natalie Scarcello, who led the year-end process and also the audit process with KPMG. And I also echo Josie's thanks to KPMG. They did a great job throughout the audit, keeping us up to date on any outstanding items to allow for effective and timely follow-up on any outstanding items. So thanks to all. So to start with the walk through the financial statements, I have up here on the screen the consolidated statement of financial position. This statement summarizes our financial assets, liabilities, and non-financial assets. The largest financial asset is our subsidies receivable, as you can see, about $1 billion. Now, as described in note 5, there are 2 key components to that number. There's the current portion, which is effectively the subsidies that are approved through the annual budget process and collected from the city as funds are required. So it's basically the outstanding balance, if you will, of that approved in-year funding. And so that current portion for both operating and capital is $407 million. And then there's a second portion, which we label as other recoverable amounts, totaling $599 million. And this reflects the city's ultimate obligation related to longer-term liabilities, such as the post-retirement medical and dental benefits. So effectively, those are funded as the cash is required, as opposed to when the accounting expense is incurred. I'll point out a couple other things on the statement of financial position. You'll note that the account receivable has declined rather significantly from 123 million to 57. So this reflects the collection of some large prior year amounts, including the more timely collection of some HST rebates and amounts related to work on third-party projects, work done by TTC for third parties, which were collected during the year 2020. Concurrent with the reduction in receivables, You'll note that accounts payable and accrued liabilities have also declined. Accounts payable reduced by 95 million. It primarily relates to a decrease in the amount of capital work done during the year. And you'll note when we get to the statement of operations, the capital subsidy revenue declined year over year. So there was less activity that happened right around the year and time in terms of the amount of accounts payable and accrued liabilities related to that activity. Moving through the liabilities, the largest amount is the employee future benefits liability, which is described in note 9. So there's two key components there. There's our post-retirement medical and dental benefits. So the amount accrued for that is $559 million. And the second component of that is the post-employment benefit liabilities for WSIB and LTD, and that totals $227 million. Unsettled accident claims, which came up earlier. So TTC is largely self-insured for the accident claims for our TTC Insurance company. And so this amount represents the amount actually determined to settle all outstanding claims as of December 31st, 2020. So once we get through the financial assets and liabilities, we arrive at the net debt number, which is, for the case TTC, almost 278 million. And so what that is largely reflective of the value of the non-financial assets that we have, where we receive funding for those items as we use them, as opposed to when we purchase them. So for example, for the tangible capital assets, most of that funding is received as the asset is purchased. But in the case of spare parts and supplies inventory, that 147 million, we receive funding for that as we use our spare parts and supplies inventory. And so effectively, that value ends up in that net debt number. In addition, within tangible capital assets, there is a handful of smaller assets, mainly non-revenue vehicles and certain IT assets, where again, we receive the funding for those items as over their useful life of the item, as opposed to when they're initially acquired. Within the non-financial assets, we have, obviously the biggest one is tangible capital assets, a net book value of about $12 billion. And this is based on the historical cost at the time of acquisition, less the amortization over the life of the asset. And that brings us to our accumulated surplus, which again is substantially made up of the tangible capital assets, the net book value of the tangible capital assets. Effectively, we recognize the capital subsidy revenue as the asset is acquired, and then any amount that is remaining net of amortization effectively is reflected in our accumulated operating surplus number on these statements. Okay, so then that brings us to our consolidated statement of operations. So this will reflect some both operating and capital amounts. The first section, our operating revenue. Of course, the item of note for 2020 is the passenger revenue line, which only reached for the whole year 41% of the budgeted level, of course, due to COVID-19. So this shortfall was primarily offset by additional operating subsidy revenue, which was ultimately sourced by the city from the Safe Restart agreements. You'll note there on the operating subsidies line, the actual amount for 2020 was significantly higher than the budget. And then also within subsidy revenue, you'll note the $814 million in capital subsidies received during 2020. So expenses on this statement are shown based on the basically broken down by service, mainly conventional and Wheel-Trans for TTC. And then within note 16 in the financial statements, there is a breakdown of expenses by expenditure objects, such as wages, materials, those kind of items. So then once we get to the revenues less expenses, get to the surplus for the year, which is substantially the difference between the capital asset additions, kind of proxy for that being the capital subsidies on the statement, less the amortization included in those two expense lines above, substantially gets to that kind of surplus number for the accounting purposes, which happened to be 134 million this year. Moving through the other statements, we have a statement of remeasurement gains and losses. So TTC uses financial derivatives to manage exposure to fluctuating fuel prices. And so this statement presents the gains or losses resulting from these contracts as market prices change. The next statement here is the statement of change in net debt. And so we previously discussed the composition of net debt as primarily being the value of inventory and capital assets not eligible for capital subsidies. And so this statement presents all the components that impact the net debt balance, but you'll see the most significant ones, or the most significant changes are the tangible capital assets and the spare parts and inventory supplies. And then the last statement is the statement of cash flows. Showing basically the total cash used in operating activities and their different composition, cash used in capital activities, and of course, the financing activities being the capital subsidies received to show that the balance of the change in our cash position year over year. So after that are the notes, the financial statements. Happy to go through it at the direction of the committee in terms of any of the notes, but they provide effectively more information and a breakdown of the amounts on the statements, and as well as our accounting policies and some commitments, contract commitments, and also a note on the COVID-19 pandemic as is required by the public sector standards, given the significance of that event. So maybe I'll pause here, and if there's any specific questions or you want me to go through any of the specific notes, I'd also be happy to do so.
Thank you very much, Alex. Julie, go ahead.
Yeah, I do have a question, Alex, on one of the notes. And first of all, this whole preparation, the financial statements and the whole audit report, I can assume require titanic effort from everybody. So thank you very much. My question is actually on a note that is noted, it does not affect the statements, but I'm curious about the note, I guess it's 22, which is called subsequent event. And it says that the TTC is now including auto insurance risks from the city. And I'm wondering if you can explain that.
Sure, I can. So basically what happened, so maybe let's back up a little bit of history. The TTC formed its own insurance company back in 1994. And that was because it was viewed that, given the nature and the operations, the insurance companies are basically charging significant fees for providing what's effectively fronting insurance. So not real, not full complete insurance coverage, as you might know personally. And on top of that, forcing organizations themselves to post large reserves to support that fronting insurance. So that was deemed uneconomical. We went through a big, long process to be able to establish our own insurance company and got special permission and exemptions to allow kind of an indemnity and guarantee from the city to kind of be that support. So allowed the capital that's required to be a lot less and the cost to be a lot less. So the city basically has gotten to the point where they're starting to, they've been experiencing kind of similar issues, maybe obviously to a lesser extent than us, but still with their own vehicles, kind of experiencing similar issues that we experienced prior to setting up the insurance company. So basically, we've been working with the Ministry of Finance and Fiscal to basically allow our TTC insurance company coverage to extend to the city vehicles. So ultimately, the payments for any claims relating to city vehicles will be coming from the city. TTC insurance will be held harmless. TTC will be held harmless. We're basically using the vehicle that we already have in place to effectively assist the city and provide, collectively, there'll be cost savings for the city itself, right? So we're trying to use the vehicle that we have to allow the city to make the similar arrangements that we already have in place and effectively provide cost savings for the city. So basically what this note is saying is that once we start providing the auto coverage for the city, then those the accident claim liabilities will include the liability associated with the city claims as well. These are the ones going forward. So nothing from the past, but the ones going forward. And then in turn, we'll also have a receivable, an offsetting receivable from the city for the equivalent amount of those claims. And from a practical perspective, Like nothing will change because all the payments for those claims will be handled by the city.
Okay, so the statements, the numbers will be bigger, but essentially it will be
Yeah.
a wash. Yeah.
Yeah, exactly. Yeah, that's a
Alright,
short
then
answer.
I don't know if I missed that or not, or if this is new. But anyway, I was quite interested to see that's happening. I think obviously there's a lot of compelling reasons. I just wanted to make sure that, you know, from the paperwork point of view that we were.
Yeah, so I can
aware.
give you the context just quickly on that. In 2016, there was a report to the TTC Insurance Company Board that identified we were starting to work on this. That shows you how long it's been in the works. And finally, just this past March, we've gotten the approval to go ahead. And now there's some paperwork to actually put it in place, and there'll actually be a report going to the TTC Insurance Company Board to provide that full update.
Okay. Thank you very much. That's all I had.
Yeah.
Thanks,
If I just may add, thank you, Alex. I guess one way of looking at this is a way of an opportunity for shared services. The TTC, the city with the TTC. So, you know, essentially looking at how we can use our various vehicles together to provide those kind of efficiencies.
Yeah, that makes sense. Joanne, do you have any questions?
Yeah, a question. Clearly, the future benefits is a pretty huge number and growing significantly year to year. Note 9 provides lots of details, but I just wanted the management team just to talk to us about that. Sort of what concerns you have, what strategies there are to manage that appropriately.
Sure. So what I can say, so to kind of put in perspective from a funding perspective, on the post-employment plans, WSIB and LTD, as those liabilities are incurred, they are actually funded on a current basis through our operating subsidy. So that is actually being addressed through our annual budgets, and the base is there now. There is some pressure, like the amount of claims on WSIB and LTD are increasing, and I think it will be something that will be noted in the budget pressure in terms of an incremental impact. But in terms of the liability you see on this statement, that has actually been funded through our through our past budgets. The more concerning item is definitely the post-retirement non-pension plans, the post-retirement medical and dental. So you'll kind of notice that, like, each year, the accounting cost that's being incurred based on all the actual determined projections of how much these benefits will ultimately cost, and the service time that's being accrued, the accounting cost is significantly higher than the current benefits that are being paid. Just to say clarity, these are plans that were established, I believe, post-retirement medical in the early 2000s, and dental shortly thereafter. So there's still an element of maturity coming to these plans. Now that there's, as I said, $559 million in that liability amount. A small portion of that has been funded, because the portion that relates to our capital employees is included in our capital subsidies each year. And so when you tie that into Note 5, in Note 5, we say that of that 559, basically 458 remains outstanding to be funded, and those would be funded through future budgets as the cash is required. So as you can see, there's currently a big discrepancy between the accounting expense recording each year and the benefits paid out of those plans. But it is a concern, actuarially. The actuaries keep reminding us that these costs are projected to medical costs are expected to continue to increase each year. So there is an aspect of it which is funded, but and then the incremental cash requirements which are required each year are basically an item that effectively flows through the annual budget process. One thing I'll also point out that might help us going forward is the fact that these liabilities, potentially might be inflated somewhat based on low interest rates, because right now we have to discount everything the present value using a very low interest rate, which causes that amount to be high. So, if one benefit of interest rates, if they do go up one day, might be to kind of lower the amount of this accounting liability, all other things being equal. Of course, then that causes perhaps other issues for the city. But so, you kind of this might help, but then there might be other issues elsewhere. But I don't know if that helps provide some context for you.
It's Mary,
Yeah.
through the chair. I just a couple of from a different perspective. WSIB costs have gone up significantly when WSIB announced that stress and/or mental health can be deemed a workplace illness, and so we have seen an increase in every organization with WSIB costs. One of our tactics coming up that myself and my team are going to spearhead is to meet with the most high up person we can at WSIB and put pressure on them in terms of our return to work and working with us more closely, because we do find I wouldn't say WSIB is apathetic. I think they have a very, very large workload, but we want attention on our plan. The other thing, through our collective bargaining right now, we can only try on the post-retirement costing is to not incur more costs, which is what the union constantly wants to put on and on, and try to be as reasonable as we can on those costs increasing. We have seen, with LTD as well, with age of our workforce, changing some more LTD cases and cases related to mental health going to LTD. So we're very on these right now for lots of reasons, for cost, but also in terms of wellness for our people. But hopefully, post-COVID as well, we might start to see a little bit of a reduction in some of these costs.
Great. Well, thanks, Mary. I'm glad you were there, because you really anticipated where it was going to go, and that is that what the next question I was going to ask, which you actually answered, was what are the let's ensure that there are strategies within the HR department around some of these questions, so that there are mitigations can be found and controls can be found, and would be great. So terrific. So you've anticipated and answered my next question. So thank you.
Yeah, it's important. Yep.
Yeah. That's all I had, Ron. I'm good.
Okay. Thanks, Joanne. Julie, anything else? No? Okay. And I don't have any questions on the financial statements that haven't already been answered as well. So Andrew, can you put up the motion that we'll ask for approval on? Okay, so similar to the auditor's report, we're asking the committee to approve the financial statements and to forward to the city clerk for review at the city audit committee. We've just changed the date to July 7th. Joanne, can I ask you to move that? Okay, and are we all in favor? We are, so that's unanimously approved. Thank you very much. Okay, item 3, the draft annual report for the TTC. Perhaps I could ask Josie to introduce this item and make any comments that you'd like to make concerning the report.
Thank you, through the chair. So annually, along with the last 2 items that you've considered, we prepare an annual report, and this report, really represents the materials other than the financial statements, which will be included in our 2020 annual report. So all this report is doing is essentially outlining what the report will look like, and it'll have a message from the chair, a statement from the CEO. It'll identify the 10-year non-consolidated financial and operating statistics and the management directory. And then the 2020 annual report will be issued following approval of the consolidated financial statements after the June 16th board meeting. It's here for your approval.
Thank you, Josie. Joanne or Julie, any questions concerning the report? None from Joanne, none from Julie. I'll simply point out, Julie, that there's an element of non-financial misrepresentation given the lengthening and graying hair of all of the commissioners except for Councillor Bradford. The photos look a little out of date for COVID times, but we'll go with that for this year.
We can update them if you wish.
Perhaps next year when we're allowed to get haircuts again. Okay, so can I ask for approval of this item? Julie, you'll make the motion?
Yep, so moved.
Okay, all in favor? That's unanimously approved. Thank you. Okay, item number 4, accounts receivable considered uncollectible. Josie, can you speak to this item?
Yes, I can. Thank you through the chair. So this is a report that we submit annually to your committee for information. In accordance with the TTC's authorization for expenditures and other commitments policy, it allows senior staff, as delegated through the CEO, to write off individual uncollectible amounts up to $50,000. Anything above that on an individual basis must then go to the board. So these amounts are written off only after all other efforts have been, efforts to collect them have been exhausted. And so what you have before you today are the amounts for 2020, the sum of them being $53,134.21. There are 2 elements to it, uncollectibles from former employees and from trade receivables. Combined, though, that amount represents a 99.99% collection rate. And we've also provided you with some history about our collection rates in the prior series of years. And so with that, if you have any questions, we're here to answer them. Thank you.
Thank you, Josie. Any questions?
No questions, but just wow, 99.99. That's pretty impressive. Pretty impressive number. So congratulations, Josie.
Thank you.
Josie, one question. I assume on the former employee category, we're probably not allowed to deduct any amount owing from a former employee from their last paycheck, or how does that work?
I believe not. Alex, I don't know if you know the details of that. I unfortunately don't, but my understanding is once they've left the system, it's impossible to try to collect them. We make all efforts, but once they have retired, then there's nothing to collect from, and we cannot collect from their pension. Alex, do you have any more information?
Yeah, no, I'm sure we can't collect from the pension. So to the extent somebody remains an employee, then there's a process to go through to be able to potentially garnish wages. But like substantially, I think these events relate to employees who are no longer with the commission.
And I assume that the amounts on an individual employee basis are relatively modest, that the 51,000 is made up from a bunch of employees, not from 1 or 2. Is that correct?
That's correct.
Right. Okay. I'm prepared to entertain a motion to receive. Julie, will you make that motion?
Yes, I will.
Okay. All in favor? That's approved. Okay, item 5, the safety review. Could I invite Betty to talk to this item? And I believe you have a presentation, Betty. Is that correct?
Hi there. Sorry, trouble with my mute button. Yes, I do have a presentation. Good morning, everybody. Can you all see my screen?
We can. Thank you very much. Please go ahead, Betty.
Okay. I will provide an overview this morning of our annual review of TTC Safety, Health and Environment Management System report. Now, this is the 4th time we're bringing this to the ARMC and the board. So as you are aware, just trying to advance my screen here. The purpose of our safety management system is to essentially, it's done on an annual basis, and our safety executive conducts this review, and the purpose is to ensure that it's continuing suitability, adequacy, and effectiveness. This review identifies opportunities for continuous improvement, evaluates how well the safety, health, and environment system is functioning and supporting the safety and security cornerstone of TTC's corporate plan. Under safety and environmental legislation, TTC board members are considered directors of a corporation and have prescribed duties to take all reasonable care to ensure that TTC complies with safety and environmental legislation and all regulatory orders. And as such, board members should be aware of TTC's safety management system and its performance. So here you can see how TTC manages our safety, health, and environment risks through the safety, health, and environment management system. It's really a comprehensive and proactive approach to managing safety risks, and it's based on a Plan, Do, Check, Act model, which is based on global management system standards like ISO 45001 and CSA Z1000. So the part that we're talking about right now is the ACT part of the Plan, Do, Check, Act, and that really serves to continuously improve safety, health, and environment management system through review of safety performance. So the current review that we did assessed the period from Q4 2019 to Q3 2020 and includes looking at various inputs, performance indicators, impact of the COVID-19 pandemic, of course, status of various safety, health, and environment projects and initiatives, findings from audits and investigations, regulatory oversight, and TTC executive safety focus areas. So new opportunities for improvement were identified that align with the executive safety focus areas, and our goals and objectives were rebaselined and categorized into short-term, medium-term, and long-term timelines, or we had to put some on hold as resources were shifted to manage the pandemic response. And this slide just essentially summarizes the response related to the COVID-19 pandemic. As you know, the measures that had to be put in place had a significant impact on TTC ridership and traffic volume, which of course impacted customer injury rate and collision rates during the review period. As you're already aware, we continue to implement the control measures for protecting our workers, customers, and the public in accordance with public health guidelines. In this slide now, what I just wanted to note here is that the COVID-19 pandemic obviously increased demand on available resources and impacted our implementation of current safety, health, and environment initiatives and projects. Updates are provided in the report that you have in front of you on various projects and initiatives, and with a focus on those that have the most significant impact across the organization. But what I'd like to do is just highlight for you a few from the slide, just to let you know where we're at with some of these projects. Under safety policy and process, our Safety Connect software, just a bit of background on that. In late 2018, Safety and Environment Department, along with IT services, we launched a project to deliver a comprehensive off-the-shelf product to manage all of our safety, health, and environment processes and data. So I'm happy to report that in fall of 2020, we went live with Safety Connect. Right in the middle of the pandemic, we were able to go live, and this is a software, it's called Safety Connect. That's what we internally branded it. The vendor we went with is Forty, and this allows us to centrally manage all safety, health, and environment information. So we started off with our Safety and Environment Department, essentially entering information related to incidents and investigations, and we're slowly onboarding non-transportation departments onto the platform. We started off with bus maintenance, and we're moving on slowly to onboard the remainder of non-transportation before we move on to the transportation departments later this year. So the idea is this is replacing all of those separate systems that we have, and all safety related information will be in one place. And we're also preparing for phase 2 of the project, which will focus on other safety processes like hygiene, occupational hygiene processes, environmental management, hazard identification, and risk assessment. The other project I just wanted to just point out to, which is of interest to the board, is the naloxone program. This past fall, the TTC reviewed the Toronto Public Health Organizational opioid overdose risk assessment tool. We benchmarked with other transit agencies and evaluated workplace hazards associated with naloxone administration to determine what the TTC level of opioid response should be. And following that review, we determined that we would sustain the naloxone program with our special constable services, as they are an appropriate group to carry and administer naloxone in terms of their training and skills. And we also decided to extend that to the Fair Inspectors Group. We will continue, of course, to review opportunities to extend this opioid system recognition and response training to other customer-facing groups as well. The other one I just wanted to quickly point out is the radon study, which we initiated in 2020, which is going to be completed over 5 phases. So phase 1 and 2 of that has been completed for substations and for some of our facilities like Greenwood, Hillcrest, Davisville, and Wilson Yard. And the purpose here is to better understand the levels of radon gas in TTC properties. And of course, at this point, so far from all the data we have, all levels are well below the action level set by Health Canada, which is 200 becquerels per cubic meter. So that's good news. Just moving on here, during our review period, if you recall, I presented to the board in December of last year on the executive safety focus areas, which you can see here. And these were, we did integrate these safety focus areas as part of our annual safety, health, and environment management system report. And we made sure that any new opportunities for improvement that were developed as part of our annual review did align with the safety focus areas, which are listed here. So just moving to our opportunities for improvement. 4 opportunities for improvement were created that, as I said, align with our safety focus areas, as you can see on your slide here. So there's an opportunity to improve our safety communications. We've already done a lot of work on this, working with Natalie's team, rebranding all internal communication channels related to safety as well, and especially with the launch of the MyTTC app and revamping of the TTC TV narrowcasting. So the idea is to really find better ways to reach our frontline employees. The other opportunity to improvement is related to our current practices and operating practices and policies. And this will include later this year, we will undertake a comprehensive review of our subway rulebook. As you know, subway rulebook provides rules and instructions for TTC employees for safe subway operations, including work at track level. And so that's something that we are committed to looking at later this year. Also moving to job descriptions and core competencies, and this is something that was part of our safety focus area. We want to ensure safety is at the forefront of recruitment processes. We will undertake a review of job descriptions and core competencies, looking at it from a safety lens. It's already being done through a diversity lens, so we were going to do this in parallel. We're also looking at, as part of that, the training element, and ensure that our employees are receiving the appropriate level of training, knowledge, and skills to conduct their work safely, and focusing on those safety critical positions. And finally, related to facility compliance, we will be developing a strategy and implement targeted facility compliance audits to assess legal compliance and address any deficiencies. This slide just briefly summarizes the status of some of those key deliverables, which I've mentioned already, which were part of those safety focus areas that we presented before. So work has already commenced, some has been completed. There's a lot in progress already. We are continuing with our executive team field visits as well, and action plans associated with that. We are, as I mentioned, implementing our Safety Connect software throughout the organization. We are focusing a lot on efforts on night operations and ensuring that there's adequate support there. related to night track level work, and as I mentioned already, there's some other work that's already happening that's on schedule for later this year related to the job descriptions and training and competency. So in terms of our goals and objectives, as I said before, the key output of our safety management system review is to establish corporate goals and objectives. And this is a continuous improvement process. So it's not that we provide a new set of goals and objectives every year. These are goals and objectives that we've had for several years now that we just tweak and update as we assess the status of our safety management system. So as you can see, there's 9 goals. They're part of your package there. I won't go through them in detail, but each of those goals have specific objectives in order to meet those goals. And what we did as part of this, as part of the effort this year, because of the impact of the COVID-19 pandemic, we did re-baseline these goals and objectives, and we did categorize them by short-term, medium-term, and long-term, and that's how it's laid out in your package. So our recommendation for the ARMC is to approve our approach to continuously improving the effectiveness of TTC Safety, Health, and Environment Management System, our approach to identifying what the priority safety, health, and environment issues are, and of course, developing those corporate safety, health, and environment goals and objectives. And we hope that we can then forward this report off to the June 16th board meeting for information. That's my presentation for today. I'm happy to take any questions you may have.
Thank you very much, Betty. Let's go to questions. Joanne, do you have any questions?
Yes, I have a couple. First of all, I want to say, Betty, it's a very comprehensive plan. So congratulations on putting that together. I think it's well thought out. It's got all the components you would expect it to have. So my question goes to, these plans are all, we always put great plans together, and then at the end of the year we go, how come, we didn't achieve our objectives? And often it comes to some simple, some really simple issues to me, and that is, have we asked ourselves the question of how these objectives, which Betty, you lead, but how do we flow them through each of the parts of the organization? Does each member of the executive management team understand what their role is, what their part is? And then those who report to them, do they understand what piece they're responsible for? Because you can put the plan together, but when it comes to the execution of it, something like this, a safety and health and environment plan really has to be embedded in the detailed operations of every part of the organization. So what does that look like? And are you comfortable that has happened? And not just you, I would say the entire executive team, because they own it with you. So let me stop there and get your sense of that.
Sure. Thanks for the question through the chair. So the whole essence of this, in terms of the safety management system and the process we have, is one of consultation. So all of this that we've put together, we don't do this in isolation. So this is, and I've communicated to the executive on this. This is not a safety and environment department work plan. This is an organizational plan. This is why it's the corporate safety, health, and environment goals and objectives. And this is why we've also incorporated the executive focus areas. These are focus areas that we as an executive team came together and identified as being very important to us. And as was said by my colleagues earlier today, safety is the cornerstone of our corporate plan. And in terms of this process, Joanne, we do bring it to the safety executive. This is a safety executive, which is essentially the whole executive team chaired by our CEO, Rick Leary. We do this review together. So this is brought to them as part of our safety executive committee, which we have, which we hold monthly meetings. And this report was presented and reviewed with them. And my team does consult with the various departments and groups in the organization as part of the development of this plan. So it's not done in isolation. And as an executive team, we do review this on a monthly basis, where we do sometimes need to shift some priorities depending on what the issues at hand are. And that's the purpose of this. This is an ongoing continuous improvement process. This isn't something that we just do once and just leave. We're constantly looking at it and reassessing and reevaluating.
Yeah, good. I'm glad to hear you say it is, and it's acknowledged that it's a corporate plan, it belongs
It's
to
a corporate
everybody.
plan. That's right.
Yeah. The other question for you is that, often, because we have lots of crises, lots of issues go awry within our system. It's just the nature of the system. There's so many moving parts and there's so many users. So my philosophy as when I was in senior management was never let a really good crisis go to waste, and often what we do is we take, if something goes wrong, immediately we go to, who didn't comply and, who's guilty. But I often it's really beneficial to flip it and say, okay, what can we learn from that so that we strengthen the processes we have in place? So is that the sort of philosophy or exercise that or how does that sit with the team to take that philosophical approach to the to crises and use crises, use problems as an opportunity to inform and to strengthen the approach?
Through the chair, that's exactly what we do. I mean, just even, any incidents that we have, any safety incidents that might occur, that is the process that's used to determine what the issues are. And it's not just, it's kind of getting down to the root cause and trying to determine what the actual, systemic problems are, as opposed to just looking at the surface. And it's not about blaming anyone. It's really about improving the process. And again, it's the essence of the safety management system. I'll repeat myself by saying that it is a continuous improvement process. So it is about lessons learned. It is about how we can make things better. And so that is what is being considered as we go through the journey here.
Great. And then my last question / comment, I guess, is that I really like your comment about the there's just better data, and that's going to just get better because we are able to collect better information. And so an element here that is really important, because we are a public system, is transparency with our users and our public system. And so because that's a way to educate all of us as users of transit too, as to what we should be aware of. So what does that, what does that, how are you using transparency? How are you sort of evolving the communication to all of us as users of transit, to educate us as well?
Through the chair, are you referring to how we're communicating about our initiatives related to safety?
Well, both initiatives, but initiatives and, here's what could go wrong. And so here's how we are managing. It can take different, there are different elements of communication that can be done, but the objective I have in mind is information that, first of all, shows that we are transparent. We're not trying to hide anything. The effort of our retired colleague who actually spoke about, the fact that individuals were committing suicide by using transit, I thought was incredibly sobering, but also really, I think our users appreciated the fact that this was not something we were hiding. So there's that component to it, but there's also the education side of it, which is, here's what's going on. So there's various elements that.
Yeah, no, you're absolutely right. I mean, we use, as you know, our monthly, the CEO report to communicate information. And in Rick's commentary, there is a special, every month there's a safety category where that's an opportunity for us to provide safety related information. So that's one way. We also report on various metrics through the CO report, and through that we also indicate what programs we have, what initiatives we have ongoing, and so that our customers and public are aware of what the TTC is doing to help keep customers safe. We also have, of course, our TTC intranet site. A lot of work is being done on that to revamp it and make it very user friendly and ensure that information is also communicated through that way. And that's a channel we can use to be very transparent about our various safety and environment related initiatives. So there's various channels of doing this. And of course, we do have stakeholder relations as well, that there's opportunity there to provide information to stakeholders through those means.
Thanks, Betty. And Mr. Chairman, those are all the questions I had.
Thank you, Joanne. Julie, any questions?
Thanks. Yeah, I actually had the same observation that Joanne did about the kind of sprawling nature of this list and wondering how you sleep at night. But it's really good, and I'm assuming that we now that we have this Safety Connect software, it's made it easier to keep, to the extent one can, with a list like this that crosses so many departments, at least sort of fits it in, at least to some extent.
Through the chair, yes, that's where we're going. So, I mean, we just launched the Safety Connect software. Right now, it's just being used by a few departments, but the idea is to bring everybody on board, and this will be the source of truth and in terms of all safety related information. So we know that whenever we need anything related to safety data, this is where we go instead of having all these various systems out there. And that's what we were struggling before. We would have our safety incidents in our system and safety, but then it was also being managed throughout the organization in separate systems. So there's a lot of duplication happening, and it was very difficult to be able to track on corrective actions related to investigation. Now we know it's all in one place, and it would provide more visibility as well for the management team to be able to know exactly where we're at in terms of addressing various safety issues, because it's in one place.
The other question I had, there were a number of these initiatives that you had. Some of them sound like they're obviously important enough to be mentioned in here, and some of them, like hazardous waste, our time frame is indicated as delayed or to be determined. And I wonder if you could comment on that. Why are they being categorized in that way? Instead of the other ones where you've been able to say short, medium, or long term?
Yes, through the chair. The reason we had to do that it's just part of our prioritization exercise, and we were, as mentioned earlier, clearly impacted by the COVID pandemic response. My team has been very much involved in leading that health and safety response. So we were just being very mindful of what we can and cannot commit to. And so that's the reason why we, for some of those ones, we decided that it was something that we can defer and put on hold. It wasn't something that was urgent enough that needed to be put into the short, medium, or long-term category. But that was the thinking behind it, was we needed to sort of re-baseline and put them into those categories based on resource availability.
Thanks, Ron. Mr. Chairman, those are my questions.
Thanks, Julie. Betty, I had a couple of questions for you as well. First off, you got my attention on your first slide. We're talking about director liability associated with the various pieces of legislation. And to that point, are you confident that TTC is in compliance in all material respects with the relevant legislation that you're referring to?
Through the chair, excellent question. based on what I know, I think we're in a good place. As I've said before, this whole process is very much a continuous improvement process. So it's not that you're always it's not always perfect. So you're always looking to make improvements. We have issues that come up that we address right away. And if there's a need to bring it to the board, we do that for you. And so that is part of the system that we have to give assurance that we are managing our health and safety and environmental risks adequately. So that in itself, having this system allows us to do that. And that's the purpose of having a safety management system.
Yeah. Yeah, I've been responsible for things like this in other organizations, and the difficulty is knowing what you don't know. So I'm sure that the TTC is in compliance with everything that they're aware of, and they have plans to deal with that. The problem is if you have executives or people in the organization that simply don't know that they're supposed to be doing certain things. And this kind of comes back to Joanne's question, I think, around how we get that through the organization. One of the techniques that I've seen used in lots of organizations is a certification process where you actually document all of the requirements of legislation to comply with, and then you apportion out responsibility for making sure that you do those things to the relevant parts of the organization. And then you follow that up with a certification process where the executives who are responsible for those activities will certify on a regular basis, whether it be quarterly or annually, that yes, I acknowledge that I have responsibility to do these things, and I certify that we're doing them. Is there any plan to have that kind of process embedded in the organization through the work that you're doing on this plan?
So I believe that work is already ongoing. I'm going to ask my colleague if Christine Leach is online, or Michael Atlas. I know there's a lot of work happening related to that with the executive and some sort of a sign-off process. If perhaps they can jump in and provide update as to where we're at with that.
Yes, hi Betty, hi everybody. I can give a quick update, and then Mike, if he wants to expand. Just as a reminder, we have been working on that certification process. I think we gave a presentation earlier in the year as to where we are. For this year, it really is about the executive team acknowledging at least 15 key pieces of legislation for which they are aware, responsible, and are willing to sign off that they are in compliance. We've been doing some education sessions to ensure they're comfortable with signing this off, since it is new and it is explicit, and driving the accountability. And Mike and his team have delivered 2 of the 3 official education sessions to date, and we're in the process of trying to schedule the 3rd one. And I believe his team has even been requested by different chiefs to do some further education at a lower level. So I think the conversations are certainly ramping up. It's my hope to start following up and getting these sign-offs to bring to the September ARMC if possible. But if there's still a discomfort and need for further work, then of course we have till the end of the year. That's what we guaranteed, that you'd be getting the first inaugural sign off this year. And as far as sort of your other element about how is this getting driven down and mapping responsibilities, that is something that our group is doing, because obviously it helps to drive where we may do independent assurance work, or at least at this point advisory work, to make sure that everybody from top down knows exactly what they're doing and how it ties back into compliance and compliance risks, as well as any other risks operationally that stem from that. So I don't know, Mike, if you want to add anything further.
No, I think that's a good summary. We've done 10 pieces of legislation to the executive and that down Some of the groups had us come in. Some we've done all 10 for. Some we've just session 1, so the first 5. So that's what's taking longer. Session 3, which last 5, is expected to be rolled by the end of this month. We may be a little late. The original plan was to have the certificate by July or August. The biggest issue, which we've committed to take back to the exec, try to put a definition about what material compliance means, and trying to figure out what are you supposed to indicate and which not material. That's the part that we're just trying to finalize in a little bit. You're not getting kind of the non-compliance issues that you already know have no real effect on the organization. They're just risk management, as opposed to the real material non-compliance, like safety issues or anything. So that's the part that we just have to finalize before the certificates are done.
Okay, thank you, Christine and Michael, for that update. I know that the material compliance thing is a tricky issue. I guess my only advice to you is that the organization will get better at that with time. It's just something that you need to work through. Betty, I would simply ask you that in the next report that you prepare on this subject, that you incorporate that certification process into the plan, because I think it's an important part of the ongoing plan. Okay. I don't have any further questions. I think we're being asked to approve the approach discussed in the report and to forward it to the full board for their information. Julie, are you happy to make that motion?
Yes, I will make that motion.
Okay, and are we all in favor? We are. That motion's approved. And given that there is no other business, I think I can request a motion to adjourn. Joanne, I'll let you do that. And are we all in favor? We are. So thank you very much, everybody. Thank you, staff, for all your work preparing for this meeting. And we are adjourned. Good
Thank
morning.
you.
Bye, everybody. Thank you.
Thank you. Have a
Bye.
great
Thank
day.
you.
Bye.
Bye-bye.
Thank you for joining us. The webcast has ended.